U.S. stocks fell sharply on Friday, surrendering all of the gains from a post-jobs report rally ahead of the Labor Day weekend. The S&P 500 was off 1.1%, while the Dow Jones Industrial Average also fell by the same margin, and the Nasdaq posted a loss of 1.3%. The losses came after a morning rally and investor optimism that a more modest half-point interest rate hike could be coming from the Fed later this month. However, the highlight from Friday's jobs report was an increase in job participation, with 786,000 Americans entering the workforce last month and pushing the labor force participation rate to 62.4%. It's my guess that the improved participation rate may increase the odds of a higher interest rate hike. And with that, the market sold off. And in other news, over 40% of Americans think civil war is at least somewhat likely in the next decade. And of course, politics matters in the survey because if you self-identify as a strong Republican, you believe the odds are greater than 50% that a civil war is at least somewhat likely. For me, I don't much care. It's better to look at what party is coming into office and figure out how the markets will react. And to do this, I look at the charts. And today, one chart, the 3-year weekly chart on the spiders, the SPY, and the close on Friday was 392.24. Now, as we spoke before, we're looking at a megaphone sort of formation with the top channel line moving through like that, and then the bottom channel line moving down like this, opening wider as time goes on. We had this reflection here expected, so we're coming on down. Are we going to go all the way down here to say 350 or so? I'm not quite sure, but that's your point, somewhere around there. I think we have a few more weeks at least on the downside, so let's watch that. That may be another opportunity to buy some stock if you've picked out some good winners, hopefully. But I think we're going to get a test of this low here. Is it going to be successful or not at this point? Time will tell, but again, I think we only have a few more weeks to go. Here into volume is declining and it looks all right. And then into the MACD, we have this top here. We rolled over. The fast line is going to come on down. And where is it going to bottom and base? I would imagine it's going to bottom and base above there. So perhaps somewhere maybe near that -10, perhaps a little bit lower, will bottom and base. Now, that doesn't mean that the price cannot come down and below the previous low, even though the MAC shows this low here, and I think we'll bottom and base above that. Back up to the price chart, that doesn't mean that the price cannot come down here or even lower. But what that's telling you is the MAC is improving, so the dynamics of the markets are improving regardless of where price goes. So follow that. That'll be a nice divergence if that happens. Here in the histogram, you can see pretty much the same thing. We came here, rolled over, and we're coming on down, and perhaps we'll bottom and base in this area again above, say, these previous lows in the histogram. Down there, same thing in the price rate of change. We're coming on down. We're relatively weak at the zero line. The relative strength, RSI, is under that 50 or midline, so it's losing some strength as well, and not unexpected. Same thing for the stochastics. And then the Williams has come down all the way from this level here down below that mid or 50 line, so the other oscillators are likely to follow. Back up here to the price chart, one more last look, and again what I'm thinking is perhaps this point, whether it comes and bottoms and bases above, near, or below, might be another decent entry point. So start looking at some stocks that you're interested in, because that might be an interesting buying opportunity. As usual, check the fundamentals. And for today, that's ChewDog Charts. Thank you.